Reuters reports that fears over broader financial contagion caused by Silicon Valley Bank's collapse have led authorities to launch emergency measures to shore up confidence in the U.S. banking system. One senior Treasury official told the outlet, quote, "The firms are not being bailed out, the depositors are being protected." Here's Treasury Secretary Janet Yellen on cable news yesterday.
Let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
Can you say whether these problems were unique to Silicon Valley Bank, or can you say whether there will be other regional bank failures?
Well, look, let me just say that we want to make sure that the troubles that exist at one bank don't create contagion to others that are sound.
However, Congressman Khanna, who represents Silicon Valley, said the Biden administration isn't doing enough to stop a run on the banks.
I wonder what you make of the Treasury Secretary's remarks. I know you've been in contact with the White House, with Treasury, and with FDIC.
I have great respect for Secretary Yellen, but I think we need to have more clarity and greater strength in what Treasury is saying. First, the principle needs to be that all depositors will be protected and have full access to their accounts Monday morning.
All depositors, meaning those with accounts bigger than $250,000, which is the cutoff for insurance right now.
Yes, all of them. There's precedent for this. Chair Powell, when he was at Treasury in 1991, the Bank of New England collapsed. And Chair Powell said that Treasury coordinated with FDIC and with the Fed, and they insured every depositor then. And why did they do it? They didn't want a regional run on the banks. Here's what I'm hearing from people in my constituency. They are getting notes to pull out of regional banks, and all of this will be consolidated in the top 4 banks. We don't want that as a nation, especially if you're progressive. The other thing is the payroll companies that are involved. Some of them have 400,000 folks. They're not going to be able to meet payroll if they don't have access to the deposits.
And on the other side of the aisle, Representative Thomas Massie of Kentucky weighed in, tweeting, "Most elected Democrats are openly advocating for crony capitalism right now. They want government to bail out millionaire depositors above the $250,000 FDIC limit. Crony capitalism or protecting customers?" Joining us now to weigh in is President of Mair Strategies, LLC, Liz Mair. Liz, thank you so much for joining us.
Thank you for having me.
I saw you tweeting a lot about this over the last few days, calling out, I think I was doing this as well, calling out people broadly on the right, even people I would have maybe at one point described as libertarians, but connected to tech, who seem to be all for what I interpret to be a bailout. We just had Matt Stoller on earlier this morning. He's from the left, but he says this is clearly a bailout. Is this hypocritical of people who say they're for small government to suddenly, when it's their money or their friends' money, say, oh, yeah, the government's totally got to come in, make it right even for the people who don't have insured deposits?
So I'm not going to say that everybody calling for a bailout in this instance is being a hypocrite, but there are some people who quite clearly are being hypocritical. We also have some people who are, I think, really doing a bad job of feigning some major ignorance and stupidity that they cannot possibly have. At the end of the day, we have people who have wanted light touch regulation. They've got light touch regulation. They want a free market. They don't like bailouts, at least ostensibly. And in this instance, okay, we're not getting a taxpayer bailout. That's great. I'm glad that we haven't gotten to that length. But we still do have, as I think it's Peter Schiff had said, we still do have some socialization of the risk here, the way that FDIC is handling this. And that's not really something that libertarians tend to be on board with. Not least because, frankly, it's not going to help deter this kind of situation from occurring again. And we have people here who are purporting that they just didn't understand that their deposits above $250,000 weren't insured. And that's just completely implausible, setting aside the fact that a lot of these people are very financially savvy individuals. Even for those of us who are not particularly financially savvy, anytime you open a bank account, it says right there, FDIC insured up to $250,000. You would have to be a complete and utter moron with a room temperature IQ to have missed the memo on that one. And there are people here who are saying that despite that, even if we're in a situation where 95% of the assets are going to be intact and can be used to pay depositors and ensure they have access to their money, we're saying, no, we need 100% of depositors to have 100% access to their money. I'm just not personally convinced that the guys who decided that they would take all of their liquid assets and put them all with this bank, that they should be getting 100%. If you've got, I don't know, your $20 million sitting in a checking account in case you have to go repair your private jet or replace your private jet or whatever, and you couldn't figure out that maybe you should split that $20 million at a minimum between maybe like 4 or 5 banks, I don't really know that that's FDIC's problem. And I think socializing that risk is probably not a great idea.
Right. So there's this great quote from Vivek Ramaswamy's Wall Street Journal piece where he says, SVB long lobbied for looser risk limits by arguing that its failure wouldn't create systematic risk and thus didn't merit special intervention by the U.S. government. Yet on Sunday, Treasury deemed SVB, quote, systematically important. And this question of hypocrisy, I think, is so interesting. But Liz, I want to ask you about the kind of political question here, which is that isn't it so interesting that it's the populists like Thomas Massie and Vivek Ramaswamy who are representing the free market, point of view, which is like private risk, private protection, right? Private reward. Whereas it is the kind of classically, much more establishment Republicans who are supposedly free market, right? The kind of, market opposition to the Trump MAGA wing who are sort of demanding all of this government intervention to protect these millionaires. Isn't that sort of interesting?
Okay, well, I think having worked for Rand Paul and being friendly with Thomas Massie, I will say I don't think it's very surprising that the libertarian wing of the Republican Party would be taking a pretty staunch free market position here and a very government shouldn't get involved position here. I think that that part of the party has in some instances gone along with Trump and sort of the MAGA wing and the populists, but I think a lot of that has been not to do with philosophical substance and more to do with those guys being disruptors and sort of interfering with the establishment, which I think generally libertarians think is a good thing. And so that's kind of why you've seen that. But I think substantively, when you look at where those guys are going to be on things versus where some more traditionally populist Republicans are going to be on things, you would find that there would be a significant difference of view when it comes to something like a bailout, whether we're talking about what FDIC did, whether we're talking about doing a full-on taxpayer bailout. But certainly, I think this does do some to underline that there's always been a split within the Republican Party between what I would say is the generally pro-business side and sort of the pro-markets or pro-free market side. And those are not always the same thing. Frequently, they are the same thing, but they're not always the same thing.
Yeah, I think that's a great point, that being pro-business and being pro-market are actually very different things. And that can be true on the Democratic side, or where you could be, I guess, pro-market or pro-equal or pro-biz. I would say I don't necessarily know that there's all that many pro-market Democrats, but there can be pro-business Democrats who end up supporting a lot of the same thing pro-business Republicans do, right?
Yeah, and I would think that, while I don't necessarily agree with Matt Stoller on a wide array of policy positions, I would say if you asked somebody like Matt, who I think you talked to earlier, Matt would say that a lot of his positions, he believes are pro-market positions and are positions that are pro-small business positions. And so that's a distinction that you might hear made on the left.
Well, Liz, thank you so much for joining us today. We really appreciate it.
Thank you for having me. I appreciate it.
And more Rising right after this.